While everyone was watching Bitcoin's price, Coinbase revenue collapsed by nearly a third. The largest crypto exchange in America just reported a $394 million loss for the first quarter of 2026, its second consecutive quarterly miss. Revenue fell 31% to $1.41 billion, and Wall Street analysts who expected the company to turn a 27-cent profit per share got a $1.49 loss instead. The stock dropped 5% within hours. But here's what makes this earnings report genuinely strange. At the exact same moment Coinbase was bleeding money, it captured the highest share of global crypto trading volume in its history. That number hit 8.6% in the first quarter, an all-time record. The company's derivatives trading volume surged 169% compared to the same period last year. So Coinbase is winning, in the sense that it's dominating its competition. It's just dominating a market that's collapsing. The mechanism is simple, and it exposes something fundamental about how crypto exchanges make money. Coinbase earns transaction fees every time someone buys or sells a token. When prices are rising, people trade more. When prices are falling, they freeze. In the first quarter of 2026, the total crypto market cap dropped 20.4%, falling to $2.4 trillion. Bitcoin fell 22%. Ethereum fell 35%. That's the second worst quarter for Bitcoin since 2018. And when the market bleeds like that, transaction revenue at Coinbase doesn't just dip, it craters. It fell 40% year-over-year to $756 million. Then there's the other problem. Coinbase holds a lot of cryptocurrency on its own balance sheet, and when prices fall, those holdings lose value. In the first quarter, the company recorded $482 million in unrealized losses on crypto investments. That's paper losses, not actual sales, but it still hits the bottom line. So Coinbase lost money twice, once from fewer trades, and again from the value of its own assets shrinking. What analysts expected was a profit. The company had been profitable just one quarter earlier, in late 2024, riding a post-election rally in crypto prices. But that momentum evaporated. By March 2026, trading volumes had contracted so sharply that even Coinbase's growing market share couldn't compensate. The company is capturing a larger slice of a pie that's gotten dramatically smaller. Here's the paradox: Coinbase is executing well by traditional business metrics. It's gaining market share. Its derivatives business is growing fast. Subscription revenue, which includes stablecoin services and custody fees, remained relatively stable at $583.5 million. The company is diversifying away from pure transaction fees. But none of that matters when the underlying asset class is in freefall. Crypto is a boom and bust business, and right now, it's bust. The company's investor relations materials tried to frame this as resilient financial performance driven by new all-time high crypto trading volume market share. But the numbers tell a different story. Revenue is down. Losses are mounting. And the second consecutive quarterly loss signals that the crypto winter that began in late 2025 isn't over yet. For retail investors who bought Coinbase stock betting on crypto's long-term rise, this earnings report is a reminder of how tightly the company's fate is tied to token prices. When Bitcoin goes up, Coinbase prints money. When Bitcoin goes down, even record market share can't save the quarter. The exchange is essentially a leveraged bet on crypto sentiment, and sentiment in early 2026 was ice cold. What happens next depends entirely on whether prices recover. If Bitcoin rallies back above $80,000 or $90,000, trading volumes will surge, transaction fees will rebound, and Coinbase will likely swing back to profitability within a quarter or two. But if prices stay depressed, or fall further, the exchange is stuck. It can't control the macro environment. It can only control how much of the declining market it captures. And right now, it's capturing more than ever of a market nobody wants to trade in. The earnings call revealed one other detail. Coinbase is shifting to an AI-native operating model and expects adjusted expenses between $4.3 billion and $4.6 billion for 2026. That's a signal the company is trying to cut costs and improve efficiency while waiting for the market to turn. But cost-cutting doesn't generate revenue. Only trading does. And trading requires one thing Coinbase can't manufacture: rising prices.